looking at it as why the hell wouldn't it go up in the face of all of this craziness and inflation and blah, blah, blah. They know that. So they step on it, make everyone say, see, it's a piece of crap. Don't buy it. Right. That's right. Until the suppression ends. And one of these banks that have been shorting breaks ranks to cover, and the whole thing blows apart, or worse yet, a failure to deliver. You see a failure to deliver in London on one of these major banks. These banks aren't just bullion banks. They have their fingers in every financial pie across the globe, and the contagion.
Something massive is brewing inside the global financial system, and it's centered right in London, inside the vaults of the LBMA. The London Bullion Market Association, the heart of global gold and silver trading, is under extreme pressure. Andy Schectman warns that if just one major bullion bank fails to deliver silver, the shock could ripple through every layer of the global economy, triggering a chain reaction far worse than 2008. Because these aren't just bullion banks. They're the same megabanks that manage global credit, control derivatives, and underpin currencies. If silver defaults, confidence breaks, and everything tied to it could unravel. So why are silver prices still suppressed while global inflation, debt, and military spending are exploding? Schectman says it's not a market accident. It's deliberate. In this video, we'll uncover how the military-industrial complex uses paper manipulation to keep silver cheap, how the BRICS nations are exploiting it to drain Western vaults, and why the end of silver suppression could unleash the most violent financial reset in modern history.
The systemic reaction would be very dangerous. Well, to be fair, it was above it reached its all-time high 2 weeks ago or so at $54. But I get your point. I understand it. And you could argue, I could argue, and again, fine line between conspiracy and reality. You have 8 Western banks that have maintained out of 1,000 plus commodities traded on the COMEX the largest concentrated short position in any commodity ever traded on COMEX, and that is in silver. Why? That's a question that should be asked more than anything. Of course, you don't have any journalistic integrity anymore in the media, so they don't ask why. Why would JP Morgan be allowed to be the custodian of the world's largest silver trust, SLV and GLD, but SLV, after paying the largest fine the Justice Department ever handed out of $920 million for spoofing or manipulating the silver market? Now, many people thought they should have been brought up on RICO charges. People should watch Chris Marcus' Arcadia Economics channel and Google the podcast he did with Bart Chilton, who was the former CFTC commissioner, where he talks about this, admits a lot of this stuff I'm saying, and he dies a week or 10 days later. Now, could have been, they say it was natural causes. Maybe, probably was. I'm not saying there's a link between it, but he spoke out to what JP Morgan has done in the market. And very clearly, Chris Marcus, Bart Chilton, Arcadia Economics, watch it. Everyone who owns gold should watch it. And silver. But the thing is this. The why to me is fairly easy if you have an open mind, and that is that the military-industrial complex needs massive, massive, massive amounts of silver to manufacture high-tech weaponry. Go to silverwars.org and you'll see how much they need. They used to publish it within the supply-demand figures from the Silver Institute. They now omit it. We've had over a 200 million ounce shortfall between supply and demand for 5 years running. The military-industrial complex is running the country, running the world in the respect that they're the ones who are making these decisions. In essence, this is what we were warned about a long time ago, but they make high-tech weapons and sell them around the world. Who owns the majority of the weapons manufacturers? Well, that's BlackRock. Who's the other primary custodian of SLV with JP Morgan? Oh, yeah, that's BlackRock. There's an 81 or 2 million share short position right now in SLV, which drives the paper price down. And then they go in and take it and do what with the money? Do they buy physical? What do they do with it? I don't know. We'll have to figure that out later. We don't have enough time to talk about it. But my point is this. You look at BlackRock, who is in many respects, in terms of their ownership of all of the weapons manufacturers, highly tied into, if not part of the military-industrial complex, who makes high-tech weapons that need massive amounts of silver, from cruise missiles to ICBMs to F-35s to stealth bombers, you name it. They all have tons of silver in it. And this is not just in the United States. These are the kind of UK, France. They're all in, have all been in cahoots with this. Standard Chartered Bank, HSBC. These are all the banks that were told by, my belief, by their respective Western governments, step on the price of silver, don't let it go. We need silver inexpensive enough so we don't get crowded out of the trade. And it's not even about the price going high, it's about its diminishing in nature. It's disappearing. Ask Keith Neumeyer, he'll tell you it's coming out of the ground at 7-1. He's told me that personally for years. 7-1, but it's priced at 88-1. It was priced at 16-1 for 5,000 years. So a company like BlackRock, who is the primary custodian along with JP Morgan of the world's largest silver trust, and there's an 81 million share short position, which in my opinion should be legal. In essence, you're creating shares out of thin air that aren't backed by silver. Even they came out and wrote in the prospectus that be careful shorting this. There could come a time where you can't get the shares or the metal back, and you could be exposed to a huge squeeze. But the point of it is that they're the custodian of SLV with JP Morgan, and they are in many respects the military industrial complex. So when we sell weapons all around the world to places like the Ukraine, and Ukraine gets blown up, who gets the reconstruction contracts? Yes, that's right. It's BlackRock. And so when you talk about why has silver not performed, it's because there are 8 Western banks that have held the largest concentrated short position in the history of the COMEX market. But as I've said for 2 years now, slowly, methodically, the BRICS nations are exposing this. And they have been standing for delivery. That's why the LBMA has its lowest amount of silver in ever since they started keeping records, about 150 million ounce float against 2 billion ounces in paper contracts that could stand for delivery. They're trading 600 million ounces a day in paper contracts. What could go wrong? And that's why you're seeing this panic. This is why they slammed the price of silver down, in my mind, the other day, and a whole bunch of silver that somehow flew to London to keep the thing going, that maybe gave them another month or two, ease the stress. That's why London was T plus 8 weeks most of the year for delivery in a market that is T plus 1 day. In other words, T trade day plus 1 settlement. The third day, the bar should be moving. Sorry, they said, for a good portion of the year, the Bank of England, we have a shortage of manpower and trucks in London. We're not able to move your metal fast enough. That means they got caught with their pants down. It's close. And it's because the countries around the world who are now coordinated, motivated, sophisticated, and wealthy say, aha.
Across the world, real cracks are forming in the precious metal system. Gold has surged past $4,000 an ounce, a historic first. Silver, meanwhile, has been hammered down repeatedly, only to rebound toward $50, its highest level in over a decade. Physical demand is breaking records. Mints are sold out, refiners are backlogged, and premiums for immediate delivery have spiked. Yet the paper price remains subdued, and that's exactly how the system is designed. Schectman exposes that 8 Western banks, led by JP Morgan, HSBC, and BlackRock, hold the largest concentrated short position in any commodity in history. For years, they've stepped on the price of silver to make it look weak, to make investors give up, and to ensure governments and defense contractors can source metal cheaply. Silver isn't just a shiny metal, it's the backbone of modern warfare and advanced tech. Every F-35 jet, cruise missile, and satellite guidance system needs it. Schectman points out that this is the real motive behind the suppression. The military-industrial complex cannot afford silver priced at $200 or $300 an ounce. So, Western governments quietly enable the banks to keep prices low by flooding the market with paper contracts that don't represent real metal. The irony? Both JP Morgan and BlackRock act as custodians of SLV, the world's largest silver ETF, while also shorting the same metal they're supposed to hold. There are over 81 million shorted SLV shares, representing silver that doesn't physically exist. Even SLV's prospectus warns investors that in a true delivery crisis, they may never get their bars. Meanwhile, the LBMA's vaults are drying up. From billions of ounces, they're now down to around 150 million. But the paper claims sitting against that total exceed 2 billion ounces. Each day, London trades roughly 600 million ounces of paper silver. In other words, for every real ounce in the vault, there are over a dozen phantom ounces on the books. For most of 2024, delivery times in London stretch to T plus 8 weeks. even though it's supposed to be next-day settlement. Officials blamed truck shortages and staffing issues. But Schectman says that's code for one thing: they don't have the metal. And while Western vaults are being drained, the BRICS nations, especially China, are using this suppression against us. They're standing for delivery, taking physical silver instead of rolling paper contracts, and emptying Western reserves ounce by ounce. China, now the second largest silver producer on Earth, is buying semi-refined doré bars straight from Latin American mines in Peru and Mexico, paying up to double Western prices to secure long-term supply. They're flying these bars back to China, refining them domestically, and locking them away in state reserves. Why? Because they see what's coming: a global reset in which paper promises won't matter. Schectman warns that if just one of these major bullion banks, like Standard Chartered, HSBC, or JP Morgan, fails to deliver, the LBMA could face a default, and that would be catastrophic. These banks are the connective tissue of global finance. A default there would cascade through derivatives, currencies, and even sovereign debt markets. The confidence in paper metals, and by extension fiat currencies, would shatter overnight. That's why the US government has quietly started drafting proposals to reclassify silver as a critical mineral. They know it's running out, and they're racing to secure it before the next supply shock hits. Schectman's message is simple and sobering. You can manipulate a market for years, but not forever. When physical reality overwhelms paper lies, the repricing will be fast, brutal, and permanent. And when that day comes, silver won't just go up. It will reprice the system itself.
You want to play this game? We'll beat you at it. We'll suppress the paper price too, and we will stand for delivery as well, because now we're wealthy. And now we see what you're doing. In fact, we're smarter than you. We will use your suppression of the paper markets against you. And that's what's happening. And someone in the West, I think, thank God, got to Trump and said, if we don't do the same thing, we're dead. And now you have the US government proposing, and already in draft form, reclassifying silver as a critical mineral. It will have its day. And the deliveries by the most not only well-funded, well-informed traders in the world have been bleeding dry all the silver they can. That's not nailed down. You have China, the second largest producer in the world, flying all across the globe, largely in Latin America, Peru, Mexico. They're buying doré right from the miners, like Keith, and concentrate, which is a byproduct of sludge. Doré are the crudely refined bars, and sending them back to pay double what the West will, and send them back to China to refine it in themselves. This is the second largest producer of silver in the world. Why would they do this? They see the big picture, and they've been using the stupidity and our hubris of suppression, keeping the military industrial complex able to get silver without the world rushing to get it, knowing its true value, looking at it as, why the hell wouldn't it go up in the face of all of this craziness and inflation and blah, blah, blah. They know that. So they step on it, make everyone say, see, it's a piece of crap, don't buy it. Right, that's right. Until the suppression ends. And one of these banks that have been shorting breaks ranks to cover, and the whole thing blows apart, or worse yet, a failure to deliver. You see a failure to deliver in London on one of these major banks. These banks aren't just bullion banks. They have their fingers in every financial pie across the globe, and the contagion, the systemic reaction would be very dangerous. So yeah, silver will have its day. The only way you can manipulate a market for a very long period of time is to push it in the direction that it is going. And they've been able to do that quite handsomely for a long time, until all of a sudden we're the most well-funded and well-informed traders across the globe, including here in the United States, understand the significance of standing for delivery instead of rolling forward paper promises. And I think we're at that point right now.
The fascinating stuff, Andy. And if we look at the mining stock, so I'm very much involved with that sector. And if you analyze some of the producers at the current commodity price, never mind higher, they're feeling much comfortable, and on many metrics, they're still quite undervalued. How are you viewing that sector?
I think it's the same thing I'm talking about on steroids. The only thing I would caution is that, you could look at the mining shares as the sponges floating on the surface of the bathtub. You pull the plug, they'll all fall, including the mining shares. But I do think, from a standpoint of undervaluation, as gold and silver have risen to these levels, the mining shares until just recently hadn't cooperated. And so, yeah, you have mining companies right now that have um, a lower cost of production than the price is at. They're flush with cash, and I think it's a tremendous place to put your money. But I think that I look at it as a pyramid, where the base of your pyramid would be things like paid for real estate and physical metals and assets. The middle portion would be something like 60-day treasuries or utility stocks throwing off a yield, a dividend with a little more risk, but still relatively conservative. And then the pyramid, the top of the pyramid, 10, 15% would be mining shares and cryptos. And the theory is you lose every penny that you put into it on the top 15. You don't make nothing on the middle 20 or 30. As long as the base of your pyramid is moving at a couple, 2, 3, 4%, you're in good shape. Well, gold has averaged 9.9% per year since 2000. So you're doing well. In other words, to me, you don't invert your pyramid to speculation. But if things go well, you'll make more money on the top 10% than you would on the bottom 90. So it's a Swiss-based formula they've used for 300 years. It's just mitigating risk and making sure that you never invert your pyramid to speculation. In other words, you don't gamble with your retirement and your future. There is a piece of your portfolio that you can, but to gamble with the majority of it is lunacy. And that's kind of what I'm getting at. But the potential and the leverage is unbelievable. There's, again, this is just a generalization, but there's probably more market cap in Coca-Cola than there is in every mining share on the planet combined. So, you know, there's plenty of room to see growth in the mining share industry.
The warning signs are everywhere. Collapsing inventories, soaring demand, BRICS accumulation, and central bank hoarding. The LBMA and COMEX have become the weakest links in a chain built on paper promises. When the dam breaks, there won't be time to react. The shift from paper wealth to tangible assets will happen overnight. Those holding real gold and silver will stand firm. Everyone else will be left holding IOUs. So, what do you think? Will the LBMA survive another delivery crunch, or are we on the edge of a historic silver default that exposes everything? Share your thoughts below. Your voice matters here. If you value truth over headlines, subscribe to Macro Edge and turn on notifications right now. We'll keep uncovering what the mainstream refuses to show, the hidden moves behind gold, silver, BRICS, and the coming monetary reset. Stay aware, stay prepared, and stay tuned, right here on Macro Edge, where we expose the truths they don't want you to see.